first off, you can't have a tiny account because you got to cover that short, right? And I don't mean cover like cover the short, I mean monetarily. So some are smaller accounts, it gets difficult. I'm not saying you have a small account, you might have a huge account, but you literally have to have enough money to cover what I'm saying. So let's say you want to guarantee this price right here. You're worried it might go to 79 tomorrow. You would short the equal amount in shares. If you do 3,000 shares, you're naked short 1,000 shares. You now have in the money, you have the right to own 2,000 shares. You can net yourself out and be flat. No risk to the downside. And guess what? Zero more to the upside if you short 2,000 shares right here and now. Finally, when you get out, right? Let's say it's at 83 tomorrow morning. Well, your options are going to go up another $1.30, right? Because they're in the money. So guaranteed, they're going to move up $1.30. So the short, you're going to be down $1.30. And you're going to literally sell your options and cover your stock at the same time. So tomorrow, nothing will change. You have guaranteed your profit at this price here and now. So the downside, you get no more upside. You've capped your upside at tonight's price, right? The positive that a lot of people like is maybe the market, maybe futures are down big tomorrow. Maybe Trump has a tantrum. Who knows what the hell happens? But this is a way you can lock in your gains. Finally, just, I think you now understand, but let's say you want to do half of it. You would short 1,000 shares. This way you've guaranteed half, and you can see how far it goes. I want to make one last thing clear. You don't have to do this as much. People that box often do it because there's not a lot of time involved, right? So mine are tomorrow. So I'm like, oh, one mistake tomorrow, down market, whatever, my profit's gone. You have till next week, so it's not as urgent, and it can't be exact because time changes based on volatility. So like your options are going to be worth $1.50, $2, maybe even $2.50 more than the intrinsic value, right? Because you have all next week. So you don't even really have to rush the box. If you were to do some, you might do half of them because you have a whole nother week. The chart looks great and there's room to 88 or so. But that is, when you box, it's not to necessarily make money. It's to literally net out part of your trade. You're trying to get flat part of your trade and guarantee yourself a certain amount of profit.